Hey guys, hope you're doing well today. I'm going to go over my trade reviews from yesterday. I was very exhausted yesterday, so I wasn't able to record the review, but I'm going to do it today with a fresh mindset going in and looking back on what exactly I did trading Apple options. I had some really good trades, some bad trades, some mistakes I made with my risk management, and one trade that I let go, which was obviously the sky high winner at the end of the day. And we'll go over this, guys. So, trading is a deep psychological game. Okay, there's a lot of issues that we have to overcome, and there's always going to be opportunity that you miss out on, and you look back on it and you're like, wow, how did I miss that? It's like you had a taste of what it felt like to have success, or to like to in trading it would be like a taste of what it is to like double your account in a trade or something, and then you just like let it go. It's like you had it in your hand and then you let it go and you watched it you watched it explode, essentially. So that's what trading is all about. And another thing I love about trading is the fact that it's a constantly improving process, and it's not like something you can just get into and expect to make money right away. Even somebody, if somebody literally gives you all of the cards and say, here, go and make money, I give you everything you need, that person will still not be able to do it because they need to find their own process that works for them, in my opinion. So that being said, let's get to these trade reviews here. So looking at Apple, I'm looking at two time frames here. I'm using the 5-minute time frame as my guide, and the 1-minute time frame is where I'm executing most of my trades. I'm actually considering starting to look at the 15-second time frame also. So first thing in the morning, if you look at what happened, market open, we tried to move up, we had a bear break, tried to move higher, and then we had a lower low, which led to a huge sell momentum for the rest of the day. Now, after that, we had a little bit of a dip buy idea. Now, what was the signal to not buy the dip here? Well, if you look at the 15-second time frame, you can actually see that it was a 15-second trend change, which means a high, a higher low, and a higher high, and then straight into a bear break. So that means it's a trend change with no follow through, which means look in the other direction. That's something I was looking at earlier. Now again, okay, so let's get right to my trades here. So I entered Apple 270 calls at 10:02 a.m. So that would have been right here. So after this huge dump and this huge liquidity sweep first thing in the morning, and this bottom was hit at 9:46. I started watching here, and you can see how we just kind of, the volume just sort of dropped off. I guess there was nobody left to sell down here, and we just started to grind at this point. Now, I guess you could say I got in a little late on this trade, but I managed to take part in some of that buy flow. So I got in at 10:02, a little bit late actually, way up here, right at VWAP actually. So if you look at that in hindsight, it's a very late entry. But again, all we're looking to do is fine tune these entries. Bottom at 112, sold half at 131. And now this is when it started to get complicated here. So at 10:15 is when I bought more right here on this pullback. So I was watching this consolidation, see how we consolidated above that VWAP, and I didn't even have the VWAP on at that point, but it was the VWAP. We consolidated very bullishly and got a sort of a long entry there. So I added more at 10:15. You can see I bought one at 121, and then after that at 10:18 I sold again half at 155, which would have been around here. So after this bull move, and I wasn't expecting us to get that much follow through. And look how we're moving on the 1-minute time frame. You can see we move up, sideways, and then a sort of a lower low, up for a lower high, and then a bear break. So we're consolidating still, and then you can see just come back to the VWAP. It didn't have the power to push higher at that point. So I got rid of the rest of the position at 10:25. All right. Now at 10:39, this is where it starts to get dangerous here. At 10:39, I entered again. So you can see we broke below VWAP there. I wasn't really aware of this when I was trading, I guess. So that's why I decided to enter long here for some reason. I don't know why I entered long, but it was a horrible entry actually in hindsight. So if you look at the larger term time frame, you can see that at that point, when Apple came up here, we were forming sort of a lower high, and a loss of the 1-minute trend was going to signal our lower high being probably set at that point. And if we go back and look, you'll see that when we lost the 1-minute trend right here at 264.50, so low, lower high, and lower low, that was a loss of the 1-minute trend. Again, it continued, lower high, lower low, slow consolidation, and then lower lows, lower highs and lower lows all the way until they managed to sweep all of this liquidity again and again just chopping afterwards, and then just literally sweeping all of the liquidity in the market at that point. That was basically the point of the trading session, in my opinion. It was just like move it up or move it down, sweep all the liquidity, move it back up, then move it back down slowly and sweep all that liquidity again for anyone who thought they were going to get in on a decent price. And then finally at the end of the day, go back and sweep all the liquidity. But this was the big money at the end of the day, at around 3:30. Go back down, sweep all the liquidity, and then shoot it up to the moon after that. So crazy price action, yes. 10:39, I got long again these calls. Why? I have no idea. Look at that. It's not even strong. We're closing below the 4 EMA. Why did I get long calls there? Did I think we were going to hit a bottom? It wasn't likely we were going to hit a bottom there. So I think I was trying to make a play off this support here. This support around 260. I was saying as long as 260 was going to hold, I was going to stay in those things. Now, here's where I messed up. What I did was I added more to the position. So we had this huge bear break, and I added more right at 10:59. So right at the bottom, essentially. At the bottom, I added more. So in hindsight, it's fine, right? Because I was adding to my position, but that wasn't part of my original plan. My original plan was not to enter and then to add more if it dumped. Okay, that was not my original plan. So I didn't follow my plan on that trade. And these are the type of things that blow up trading accounts. When you get into a trade, you don't necessarily have a defined stop, and then the market dumps on you, and you either panic or you freeze or you don't know what to do. And then you end up adding more. And then it then starts the vicious cycle of lower high and lower low, and then your position is slowly dying, especially with options. If you're trading out of the money options, those things are just going to get destroyed fast, okay? They're going to get killed. The premium gets killed when calls get killed when the market's in a downtrend. Puts get killed when the market's in an uptrend. That's just how it is, okay? So I added more there at 10:59, and then I managed to sell half the position at 11:08 when we saw a pop here. So I got lucky in that sense. So you can see here again with the lower high and lower low, going back to test the VWAP, again that 260 area, which was very key all day. 260 and 261 were key areas for the majority part of this price action day. So I sold 2 there. Then again, what was I into here? At 11:30, look at this, at 11:30, I decided to buy more again. Look, test the support and then break it. And then I finally gave up. At 11:38, I gave up. I said, you know what? Lower low like this, I'm giving up. So I finally gave up. So that was a bad trade on the 270 calls. I started the day off well with 270 calls, and I was actually up 5 times on my risk. Again, 2 days in a row. I'm up 5 times on my risk, and I don't take the money and run. Seriously, I'm working out the kinks in my trading, guys. So that was a failure at the end because I kept on trading these 270 calls, and the market was downtrending and sweeping out the liquidity essentially, and we bottomed all the way down here near the low of the day. This was the time to be long, right at the low of the day, not during this crap, not when we were getting these weird liquidity sweeps, sell it, retrace back up, sell it again, chop around, sell it again, not interested in that type of stuff. So after that, I got off the computer for the majority part of the day. Actually, let's say here 11:59. Yeah, so look at this big rally here off the low of the day. 11:59. This is when I started to trade the puts. Now this trade, here's when we get a little bit interesting here. So 11:59. Take a look at what happened here. Huge rally up, consolidation, and then I got into some puts here, and then the puts were golden there on this bear break. So you can see huge rally up, slow consolidation, and then chopped it down to grab some of that liquidity. Anybody who panic bought up here, anybody who decided to say, oh my god, it's going up, I gotta buy, they chop it, and then boom, you're out of the trade, So again, I got into those 245 puts right there at 11:59 at 124 per contract. At 12:02 I sold half. At 12:02 I sold another because they were flying, and then at 12:09 I got rid of the last contract on this pop right here. So I got rid of the last contract for break even. So I managed to take some money from the market with this. So I was risking essentially right above 258. I would have been risking up above there. Market rolled over. I was taking off the puts as this was rolling over. So I decided to become a bear very briefly, and as you can see, it worked quite well. Sell the rallies. And that's pretty much it. That was that for that trade. At 12:09 I was out. On this pop, I was out of the trade. Okay, I got rid of it for break even. And just a quick note, to get out of that last contract, I use an adaptive market order on the urgent setting in Trader Workstation. This is one of the best ways if you have to exit or enter extremely fast, if it's like an emergency. So you use a market order, but not any market order, because if you just put a market order on an option, market maker is going to rip you off. So you got to use an adaptive order, which means it scans for best available prices. And depending on how urgent it is, so in this case it was very urgent, I need to get the heck out of the position before it's red. I set it to the urgency setting, urgent, and that's set to a hotkey, which would just be Control S or Control B. And I only use those ones in extreme emergencies. Normally I'm in with limit orders. Normally I sell with limit orders too. We'll take a look at what happened after at 12:47. So market grinded higher. So we're in an uptrend. If you look at the chart after that, after 11:50, that was approximately the low of the day. We grinded up, higher low, double top, higher low, higher high, and then we started to grind higher until about this 263 area, 264. So we'll look at what happened here around 12:50. 12:50, I got into the 255 puts. Did I really get in at 12:50? No. I got in early. I got in at 12:47. So look at these puts here. 255 puts. I got in at 12:47 right here, right as we were chopping around. Still kind of holding this moving average here, this 12 EMA. As you can see, we're respecting it quite nicely. What we had was a bull break. Look at this bull break. Now this stopped me out of the trade. Okay, I got into these puts here, and then I stopped out on the bull break. Break above 262.50, I stopped out of the trade, okay? But look at what happened afterwards. This is really, really interesting. 12:52, I got back in the puts. Look, right here, as soon as we saw the bull break, we had two inside bars and then an inside bar break. I got in right on that inside bar, which in a way could have been maybe a bit of an early entry, but something was telling me that 263 was not going to be able to get to break based on what I was seeing on the time and sales. So I decided to try a second time here. Got back in these puts, market rolled over, and look how much it rolled over after that. You can see, boom, inside bar, and then bear break, inside bar, bear break, down all the way to 1 o'clock. So what happened is I sold one at 178 first. So I bought them at 150. At 12:52, which would have been right here. And I didn't overpay because, as you can see, the market was an inside bar. I didn't buy the puts on a bear break because puts on bear breaks are very expensive, right? The puts fly around a lot, especially, and I'm trading same day expiry options here, guys. So keep note that these things move very fast. So if you want to buy puts, the best price you're going to get is when the market is either on an uptick or on a sideways tick. If you buy puts on a bear break, you're probably going to be overpaying for them. That's just generally how it works. So I got in at 150, sold one 3 minutes later at 178. So right on this bear break, I sold one right away. I wasn't playing around. We got an inside bar, and then another bear break, two more inside bars, another bear break. I sold one at 193, and at 12:59 was the point where these puts were the most overpriced. So they went from 150 to 193. Nice scalp there. Right below 260. But we regained 260 pretty fast. And at that point, I had one contract left, and I sold it at 162 at 113 or 112, which would have been here. So you can see how we tried to move higher and failed another time, then chopped around for 3 or 4 or 5 inside bars in a row, had a bear break, and then an inside bar after a bear break. That's a red flag. So again, I'm learning this stuff. I'm studying it as I see it on the 1 minute time frame, 5 minute time frame, etc. But a lot of times when you see a break and then an inside bar or a failure, that signals to be cautious about your position or to look to get out. In general, if you're seeing a choppy range, you probably don't want to be in the position. So let's say you were long 100 contracts and then you took off most of the contracts. Now the market's in a tightening range. You probably want to get out of the majority of that position because you don't know what's going to happen. If you start to see more clarity, you can start to maybe add back a bit to that position. But if you start to see choppiness, it's not worth the risk to be in a position, because we know in these crazy markets that when we're in tightening ranges and these tightening ranges break, they can break very aggressively against your position. So you have to be ready for that to happen, okay? So that was the end of the put trade after I saw this huge spike That was the end of it. And I believe I exited that trade also with an adaptive urgent market order. So that saved me. Got out at 162. So that trade was a winner on the 255 puts. So if you take a look there, yeah, you can see that that was a good winner, $60 total. There could have been more if I had exited down here when I saw this signal of a bear break, inside bar, and then a bull break. That right there was a signal. Okay. And then after that, let's keep going here. 120, I got into some calls. 120. Yep, right here. Bull break, inside bar, inside bar, inside bar. Bull break, bull break, bull break. And I got in long right here on this break. And I think I was selling them pretty quickly. I bought them at $1. I sold one at $1.04, $1.12, $1.09. 126. Interesting how I sold pretty early. So bull break, and we were chopping around here. So yeah, look at these kinds of inside bars where we're moving higher, inside bar, inside bar, inside bar, bear break, inside bar. Yeah, so this kind of price action, you don't want to be long when you see this type of stuff. You want to be long when you see a break of that type of idea. So I think that's why I was being cautious with these calls in general. I wasn't looking to hold them very long. It was just sort of a scalp. So I was scalping here, see if I could get some more on to buy them off me. And that's pretty much what happened. So I got out of them pretty quickly. Now here, let's keep going here at 130, 129. Got into some more puts right here on this bear break. It's over and over again, the same thing. Look at this. We had the choppy range. Couldn't get above 263. I got long these puts, the 225 puts. No. The 255 puts, it was the same puts as earlier. I got in at 122. Now remember, these puts are a lot lower priced than they were earlier. I was trading them around 150, 190 was the high, 193. Now they're at 122 up here. So I'm buying them again. They have slightly lower deltas, and I'm risking above 263 at that point. So you can see that we tried very briefly, couldn't get it, and then huge bear break all the way back down to 260. So that was a nice scalp again. Sold the first one at 135 right here. And you can see that they weren't really moving. I sold it at 125. That's only $3 more than where I bought it. After that, they really moved at 136. Look at this. After this huge liquidity sweep, these puts were now expensive. They moved all the way from 122 to 139 to 141. And I believe they were trading above 150 at one point. So, and then you can see a huge bounce off the VWAP again, and then we continue with the bull trend. That would have been it. So the trade was here. It was boom down to the VWAP, and that's it. Again, you see how the price has been respecting the VWAP for the majority part of the day at this point. I know we're very zoomed in on the 1 minute time frame, but we're going on these scalps. Remember, I'm always using the 1 minute accompanied by a larger time frame because that's so important to gauge the structure of the market, okay? You can't just only trade the 1 minute time frame. All right, then the last trade of the day, the last two trades of the day, my God, the worst trades of them all. So, okay, so this was Apple afterwards. Now I wasn't trading. I got back to the desk around maybe 2:30, 3 o'clock, and I was just looking at what was happening. And you can see that we were just consolidating here. Look at this very choppy action above the VWAP. And then around 3:30, we started to see some volume come in. Huge bear break. Look at this inside bar there, and then a huge bear break inside bar after that on this 1 minute candle. We went all the way down below 255, and then after that they started to come in. Look at that. Oh my gosh, they started to buy. Now this is very aggressive price action, so this could have probably dumped, got a retrace, and then continued to dump. We don't know, okay? But what we saw after that was really something crazy, okay? So I was looking to be long this market, and I even said it in my chat room and to my friends that were trading. I said, there is a chance that we see a short squeeze into the close. I said that. There's a likelihood. If the market can get above 263, and I believe on the SPY, I don't quite remember what the level was, but yeah, if the market can see that, most likely we could see a short squeeze. Gosh, now look at this. I was long these 290 calls at 342. So look at this. Let's look at this price action together here. Bull break, inside bar. Bull break after the inside bar. 342, I was long the calls. I got long these calls. Now at this point, these are next week expiries because my broker won't let me trade the same day expiry unless you have the margin requirement to actually buy the shares at that point, even if you're buying the option. Just because there's risks associated with trading same day expiry in the last hour of trading. So I was trading the next week 290 calls at that point, so you can see the expiry changed to March 20th. Got in at $1.01. Okay, and I sold them. Look at how I sold them too early. A minute later, I already sold one. Why? Look at how this market grinded after that. I sold one and then I sold the other one up here. Why was I being so conservative? I had to know that the market was likely going to see some kind of short squeeze since we were breaking above our trading range of the entire day and we were seeing consistent follow through above the range that it's been trading in all day. So I sold way too early. These calls, I bought them at $1. Into the close, they were at $3. Okay, so these two contracts I bought at $1, they went to $3. So that means that I would have turned $200 to $600 approximately based on this move. Now, obviously, could have, should have, would have, but all we can do as traders is to improve our game for the next time and be ready for this type of stuff. Okay. Now, here's where I really messed up. I tried to short this too. So at 352, I actually tried to take a short because I thought this was overextended. So look at this move right here. We had bulls, 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 slight consolidation, bulls, 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 slight consolidation. On this slight consolidation, after the second bull break here, I tried to short it, okay? And I covered immediately as it broke higher. So I was paying for these puts down here. I paid 136 for these puts, gosh, and then I covered them for 108. So a decent loss. So I gave back the majority of my profits on the day at that point, and I was up about 7% in the account up until then, and I managed to give it pretty much all back after on this trade right here. When in reality, I should have just stayed in these long calls the whole time, and I've just been profiting from this short squeeze. Oh, so you live and you learn, guys. So those are all my trades for today. So I encourage you, if you want to learn more about this, is to go back and analyze each one. Look at the chart, look at the 5-minute chart, look at the 1-minute chart on Apple, and look at how the price reacts at the different key areas. So again, what I said is that at the end of the day, why a short squeeze was likely is because look at this trading range that we saw. We're in this trading range, and then when we finally saw a break of that trading range, it was likely that we would see at least a measured move. Now, what I didn't realize is that how aggressive that end of day volume was gonna be. Okay, and once we saw the short squeeze above, when Apple was above 263, 264, basically we were looking at the high of pre-market at that point, and there was enough momentum to just keep rolling this all the way up. Now that is just unbelievable. If you were watching the tape, it literally looked like, I don't know if you've ever seen a slot machine when you win the jackpot. I've never seen that personally, but I think I know what it looks like. It's when the numbers are just rolling on the screen non-stop. That's literally what the tape looked like on the SPY and the Apple at this point. The tape just kept rolling and rolling and rolling and rolling and rolling. It's like they were just spamming the buy button. Like Jerome was just there sitting at the trading desk and going on every single call option or every single share of the market of whatever. I don't know what the hell he was buying. And he was just spamming the buy button nonstop. Buy the ask, buy the ask, buy the ask, buy the ask, buy the ask. And up we go to the moon, baby. Jerome saves the day. All right, guys, this is a bit of a long video. So I wish you all a great weekend. I'm definitely going to do some more reviews on my trades for this week. So this small account challenge is good so far. I'm about break even on the account. I'm a little bit up for the month, but I managed to give back the majority of my profits on a dumb trade I took Wednesday afternoon on Facebook. So don't allow yourself to trade when you're tired. All right, guys, I wish you a great weekend. Take care. Bye.